What is going on, investors? Hopefully you guys had a great week out there. That's right, it is Friday. And every Friday here on the Investor Channel, we go over all the major FAANG stocks, plus Microsoft and Tesla, and the N in FAANG happens to be NVIDIA over here on this channel. We'll go over all the news and the technicals. Now, a few programming notes down below in the description. You'll notice timestamps. So if you just want to look at Facebook news and technicals, you're more than welcome to do that. You'll be able to jump around this video, listen to the company information that you want to do. Now, the other thing is I got links to my Instagram and my Twitter account. So if you want to follow me there, I'd love to see many of you over there as well. Links again in the description below. Let's kick things off like we always do with Facebook. Before we get to that, I want to remind everybody, I said this on the last week's video, we're now in October. It is earnings season, okay? In some ways, that'll slow the news cycle down just a little bit to a certain degree. These companies enter quiet periods in terms of things that they can say, but we are on the brinks of earnings. It could shrink volumes. You know, it could be a number of different impacts on the market. So that's why we're aware of it several weeks ahead. Now, Facebook, Apple, Amazon, and Google are going to report on October 28th. Microsoft is going to report a few days before that on October 26th, and Tesla will report on October 20th, and NVIDIA several weeks later on November 17th will report their earnings. Just keep those dates in the back of your mind, and as we approach those dates, obviously, we'll have lots of information here for you on the Investor Channel. Kick things off like we always do with Facebook. Started the week at 347, ended down to 343. We'll talk about this from a technical perspective. You can imagine this thing was busted last week, got even more busted this week. We'll see what happens with Facebook from a technical perspective towards the end of the video. Now, Facebook took a Senate grilling this week on their impact over children. This stems from a Wall Street Journal article called The Facebook Files, where they indicated the company was targeting teenagers and doing all this different stuff. And now the Senate is acting like they really care about it. And I'm sure, look, they probably do care about these things. But here's my message. If you're a parent out there and you don't like what's going on Facebook or Instagram, well, maybe don't let your kid use it. That would be my advice. Maybe that's good advice. Maybe that's bad advice. I don't know. Moving on, Facebook is bringing its short video Reels feature to its flagship app. So if you follow me on Instagram, again, link in description below to the Investor Channel Instagram, sometimes maybe I'll post a reel, which is on Instagram, maybe like a 30-second or a 60-second video that you post, and you might be able to put music to it, or maybe you're talking for 10, 15 seconds or whatever it might be. It's just a video form, much like TikTok, okay? I'm pretty sure Facebook took the feature either from TikTok or Snapchat or maybe a little bit of both. Well, that was only available on Instagram. Now that's going to be available on Facebook. So if you're a fan of Facebook and you're on there and you've got all your friends on there and your family and those types of things, well, pretty soon you're going to be seeing their Reels, because inside the Facebook app, not just the Instagram app, but now the Facebook app, pretty soon you'll be able to have that Reels feature where you'll be able to post a short form video, and Facebook will start to be looking a lot more like TikTok, I'm sure, over the next coming months. Now, a UK regulator has cleared the way for Facebook's takeover of Customer. This was a $1 billion transaction that got consummated sometime last November. And Customer is a provider of customer relation management through its software of a service. So think a little bit like Salesforce.com, where you can manage your relationship with the Salesforce.com is way bigger than that, but like a customer relation thing where you can, contact info, meetings, those types of things all in one database. So that obviously is what Customer does. Facebook acquired them. Now that UK is clearing that both the United States and the UK drew heavy antitrust scrutiny, but it looks like the UK regulators will clear the way for Facebook to complete that acquisition. Moving on to Apple, started the week at 144-ish, ended the week down at 142. Again, we'll talk about what that means from a technical perspective as well. Actually had a nice rally over the last couple days. This thing was way down, under 140, but rebounded nicely. That could be a sign of things to come. We'll see what happens. There was also some positive news with Apple, as analysts are seeing early signs of strong iPhone 13 demand. So the iPhone 13 is the one that they announced, I think it was 2 weeks ago. They began shipping this last week. My wife, I've already got hers. And look, what they're saying is that this phone, especially the Pro models, has a 1 terabyte option for storage. And you might might say, well, what do you need 1 terabyte for? Well, the camera is a big feature on the iPhones, okay? The 3-lens camera. If you're shooting a lot of video, 4K video, 60 frame per second video, ProRes video, all this stuff, you're basically getting like Hollywood style quality out of an iPhone. And so imagine if you're shooting a bunch of 4K video, well, yeah, your iPhone is going to fill up super fast. Okay, you don't have to record too many 4K videos on your phone to realize that eats up a lot of space. So this 1 terabyte option, which sells for $200 more than the prior most expensive option, people are buying this phone. And so we'll see. Apple's earnings, again, coming in on the 28th. They'll have a small amount of data to work with. So we'll see a little bit of iPhone 13 demand. Obviously, the first quarter coming sometime next year when Apple reports basically kind of their fourth quarter holiday season will be the big one where we see like how popular is the iPhone 13. Well, we'll see a little bit of it in this most recent quarter, and it could be explosive, especially because they're selling, it appears, more of not only the most expensive phone, but the most expensive version of the most expensive phone. That should make you really excited if you're an Apple shareholder, in my opinion. Now, moving on to Amazon, started the week at 3,356. This thing is broken down. And it is not broken up. And so we'll talk about that from a technical perspective as well. Can we be in a buying opportunity for Amazon? End of the week at $3,283 per share. Now, Amazon unveiled this new, I'll zoom this in a little bit so you guys can see this a little bit better. Amazon's new Echo Show 15 is meant to hang on the wall. Basically, it looks like a picture frame. I thought this was actually kind of cool. I don't know if I'll buy one. I was thinking like if you're a creator on YouTube, you know, there's a lot of YouTubers like me that have stuff over, my office is a complete mess. I could make it look nicer in here, but maybe one way I could make nicer is put this Amazon Show 15 over here and put the weather, some stock quotes, or a saying on there. And that looks like what you can do here. You can put your calendar on here, maybe a note, maybe a shopping list. Maybe you got a video on there. It looks like you can make video calls on this. I thought this was interesting. Is it going to be a big seller? Probably not, but this is a pretty unique product, right? Okay, this is something that hangs on your, it's like an iPad, but it's supposed to hang on your wall. Thought that was kind of cool. We'll see the demand for that as well. Now, the other thing that Amazon did, I love this as a company. I don't think this is a very functional product. I don't think it's worth the money. Something like this is supposed to go for $1,000. This is a dog-like robot, which will cost $1,000, and it'll move around your house. It'll monitor your house. Basically, it's like a home alarm. It's an Alexa. It's something that will roam around your house. And it's going to cost $1,000. It doesn't do a whole lot. I tell you what, if it picked up my children's toys and vacuumed the floor and mopped my travertine tile, I'd buy one of these for probably $1,000. I mean, way more than $1,000, but it doesn't do any of that. But this is the early version, okay? Early versions of smartphones, early versions of computers, those types of things didn't have great capability. It wasn't until later on, and also maybe third-party developers develop things. Like maybe Amazon will partner with one of those robots that sweep your floors, and then we can attach it to this thing and it can have some actual functionality. We'll see what happens. But Amazon released a slew of products, just like the hanging Echo Show that I showed you as well, but also this robot as well. And what I started off by saying is I like companies like Amazon that puts out a product like this. I don't think it has a lot of value. Will a couple people buy it? And I say geeks probably in an affectionate way. Those are the people that'll probably buy this and support it in the early days. And then when there's more and more functionality to these types of things, I think you could get much, much more mass adoption. Think about if you wanted a security system. This could be a part of it, right? It could roam around your backyard, maybe even your front yard, around your cars, around anything valuable you have in your house. Could be a very, very valuable piece of equipment at one time. We're in the early days of that in Amazon. I like that they're getting into those types of like hard good businesses and that have not a lot of competition as well. Amazon is about to get walloped by higher labor costs. Yeah, no kidding. So is everybody else, okay? Look at McDonald's, look at Walmart, look at Target. all these companies, FedEx, UPS, they are getting walloped by these increases in wages because people just are not coming back to work, and it's hard to get people to come. And so one way to get that is by increasing the wages. And we're seeing that with Amazon in terms of their benefits and the wages. It's rising to about $21.82 versus $18.82. This was on the average employee. So that's a big increase. Okay. And so, but look, everybody is going to be in the same boat. There'll be some counteracting through higher prices. We'll see if these wages and this type of thing is permanent. And I tell you what, if it's permanent, that means the companies that innovate and get productivity out of, number one, the employees that they have, but then start eliminating employees through productivities, through robots, through computers, through AI, through different types of maybe partnering with other third parties out there to help them scale their business. Well, I tell you what, Amazon, I think, is in a great spot for that. So as wages rise, will it hurt Amazon's earnings? And that could be why the stock just simply has been stuck in neutral for like a year, is because analysts see, well, look, the numbers aren't that good. And last time we did a video on Amazon's earnings, they really weren't that good, okay? And I don't necessarily think they'll be great in the upcoming quarter. The fourth quarter, certainly with Christmas and things like that, will definitely be good. But I think Amazon is probably, 12 months, 24 months, going to have to deal with the labor shortage, deal with higher wages, and likely not being able to pass all those costs off onto the consumer. We'll see if that is permanent, and we'll see how Amazon is able to innovate over that. And again, my point is Amazon's in a position that they're going to be able to innovate there, whereas I don't know if the other companies will be able to. We'll see what happens with that. Now, moving on to NVIDIA, which made its debut on the FAANG Stock Recap Show last week, started the week at 214. This thing's in a downtrend, and so I think we're picking this up actually at a good time, because to be honest with you, Netflix was breaking out, and I didn't want to touch it. Yeah, it could go on a monster run. Wouldn't surprise me, okay? Wouldn't surprise me if Netflix goes on a monster run like a Google or a Microsoft has, or even like a Tesla has over the last couple months. But NVIDIA is actually pulling back, and I think we could get quote unquote value, okay? 51 forward times PE on this one. But from a technical perspective, we're starting to see some value there. Now, Electronic Arts, which is one of the biggest game makers out there, I probably don't need to tell you that, is bringing 5 additional games to NVIDIA's GeForce Now. So NVIDIA has this cloud gaming service where all these games get played on it. And it's cool for like the developer because it doesn't require any additional development work or porting or all these expensive things that make games more expensive. You can just kind of launch it to this GeForce Now, and lots of people are playing. Over 20 million hours of gameplay are streamed each month via GeForce Now. Oh, that was crazy. That's a ton of hours. And it looks like there's just more and more demand for this. And it also looks like NVIDIA has the support of the game makers like Electronic Arts, Epic, and those types of things. That those guys are really excited about this. So that is good for NVIDIA, since gaming chips are actually its biggest profit center, at least at the current time. Now, moving on to Google, start of the week at 2,822. Oh no. I haven't said this in like a year. Google is down, and it is broken trend. Hello, you're going to probably want to hit that link to the Google chart at the end of the show, because this one is broken technically. And so we'll talk about that here in a second, but the end of the week at $2,730. Now, Google drops its plan to offer bank accounts. I'm kind of bummed about this, honestly. They were partnering with Citi and other banks and other credit unions and stuff to offer some banking services. Obviously, they have Google Pay. So they're still going to be in this business, but Google was actually going to be the quote unquote bank. Okay. And I was actually excited about this because if you look at the data out there, of that, like a lot of people, I'm talking like 40-50% of Americans, especially when we're talking about like lower income people, they don't even have a bank account. Okay, drive through like the roughest parts of your town. One of the things you probably won't see is a bank. Okay, and so I actually think there's a absolutely huge need here in the United States to get people that are underbanked get them a bank account, get them some financial, literacy, I guess, to a certain degree, but financial freedom, because a bank account can offer you some financial freedom. And I thought Google might be able to do that. Okay, somebody with a Google phone, somebody that's using Google all the time, other Google services, well, maybe they'd be willing to sign up for a bank account with them instead of going into one of these stuffy branches and opening up a bank account. Unfortunately, it looks like Google has dropped their plans for that. Now, Google tells a Europe court phone payments were a promo, not anti-competitive. Now, follow me on this one. So what Google was doing was they were going to phone developers. So obviously Apple's a phone developer, okay, and they're the biggest one, right? Okay, and so what Google was doing was saying, hey, if you want to develop a phone, we'll pay you to help, offset some of the cost to develop that phone. Only if Google search is the only search engine installed and the default search engine on the phone. So what Google was doing was basically kind of subsidizing other phone makers to make phones with Google as the search, because they have to pay Apple like billions of dollars every year to be the default search engine on the Apple phone. Well, they want it on the other phones as well. And the EU thought, hey, this is anti-competitive. Google is paying these phone makers to not support Yahoo or Bing or any of the other search engines out there. But Google's saying, no, wait, we were actually doing this as an incentive. We were paying them to do this. And so we'll see what happens here. I'm not a lawyer. I have no idea what's going to happen there. I just thought Google's argument was interesting, to say the least. Now, Google slashes revenue it takes for its vendor sales on its cloud platform. So this is Google Cloud. Obviously, you have Google search engine, which is probably 90% of the company. You have YouTube, which makes up another couple percentage of the revenues. And then you have Google Cloud, which is a pretty big business, multi-billion-dollar business. But in terms of profits, it's still not there. And they are cutting the payments that it takes from 20% down to 3%. So this is a blow. This is a whack-a-mole over on Amazon and Microsoft, its two closest competitors in the cloud space. This is a great example. So people want things privatized or run by the government. And look, some things run by the government, run by the private sector might be okay. Okay, here's where Microsoft and Amazon and Google are in a triangle of competition for cloud services. And what are they constantly doing to pricing? They're constantly driving it down. So the more competition you can get onto things, it tends to drive prices down. That's some of the complaint we've heard with Apple and their App Store and those types of things. But I think that Google has a good leg up here. Whether or not this turns into a major profit center for them, we'll have to see on the upcoming earnings. But as I recall going over Google earnings for the last several years, that Google Cloud unit, by the revenue growth looks good, the profit's still not quite there. And I think if you're going to drop prices, probably means profits are still not going to be that good. Moving on to Microsoft, started the week at $293, broke down a little bit. About $289 on the share price on this one. Microsoft is opening their Windows Store to Amazon and Epic Games. So, Microsoft is going to launch their new version of Windows. I think it's next week on the 5th. I could be wrong about that, but it is a much more, I don't want to say open source, but kind of an open platform where companies like Amazon, Epic Games, people that could potentially sometimes be in competition for Microsoft, they're going to be allowed on that platform. And Microsoft is going to allow developers to keep 100% of the revenue from the apps if it uses alternative platforms. Again, unlike Apple, which doesn't allow that at all, at least at the current time. The judge ruling a few weeks ago in the Epic Games lawsuit obviously is going to likely change that. But Microsoft has an attractive platform, and they're attracting companies like Amazon and Epic Games. Moving on to Tesla, start of the week at 778. We talked about from a technical perspective, this is probably the best looking stock. Now it went sideways. End of the week at 775. Any minute now, I'm actually expecting, I think we were getting delivery numbers today on Tesla. Maybe it's tomorrow we'll end up giving them, because I saw NIOs, I saw Li Autos, I saw GMs, and I think we're supposed to get at the first of the month at some point Tesla delivery numbers. Those sometimes come in over the weekend, so keep an eye out for those. those. I expect them to be extraordinarily strong when it comes to Tesla. Nikola's patent infringement lawsuit against Tesla was shelved by a judge. Take a look at this. This was written by Judge James Donato. He said, he says, Nikola has dropped the ball on this 2018 action is languishing without explanation or apparent good cause. In other words, Nikola ran out of money and couldn't continue this lawsuit, in my opinion, and also it probably was frivolous, to say the least. Now, Chamath Palihapitiya, who is a famed investor, sells his entire stake of Tesla to fund his other investments. Now, there's some backstory here, because I didn't bring up the article, unfortunately, but back in January, Chamath actually got on a same CNBC program and did an interview and said, quote, and I quote, "Don't sell a share of Tesla." This was back in January, okay? Now here we are about 9.5 months later, and he is getting on the same CNBC program and saying, I sold my entire stake of Tesla over the last year or so. So he kind of opened up a little ball of wax there. Back in January, he said, don't sell a share. And he just said he sold his entire stake over the last year or so, almost implying that he has been selling for a lot longer than just over the last few weeks or so. So he's been selling Tesla even when he was telling you don't sell a share. So I thought that was interesting. The other thing is he said is the reason why he sold his Tesla shares. He said, I don't have an infinite pool of capital. Now the quote's not in here, but at the end of this interview, he literally says this. I'm a meager man with meager means. This is a multi-billionaire. I saw his net worth being 1.5 billion. This is a billionaire saying he's just a meager guy, humble guy. And luckily the interview was like, oh yeah, right. Come on. So I think he's blowing smoke up our you-know-whats, okay? He's been blowing smoke up our butts about Tesla. He could have here's the thing about, a lot of people don't understand like how rich people aren't taxed and things like that. And this is why you have certain members of Congress and Senates and in the government, they want a wealth tax. They want to tax you on the value of your house. They want to tax you on the value of your stock portfolio, because here's how guys like Chamath really get around paying a lot of income tax. He has all this Tesla stock. Well, what he could do is actually borrow against it, okay? And where the bank basically takes a lien on those shares and then lends you money, okay? Because he had to sell his Tesla stake and pay capital gains tax. And so instead of that, he could have taken a loan out on that at like minuscule interest rates and not had to pay tax and not had to sell his Tesla stake. So this tells me he's gotten incredibly bearish on it, or he is in a really tight spot financially, because it would take a lot. I think about this as in my own situation. I'm not a billionaire. I'm not anywhere close to being a billionaire. But for me to sell my entire IRA account, okay, and pay taxes and a penalty on that, I'd have to be in a really, really tough spot financially, honestly. And I know Tesla wasn't his retirement account and things like that, but like literally, he would in January he was saying don't sell a share, and now he's sold the whole thing. It's just confusing to me. Now, what's also confusing, and it has constantly been confusing to me, is Cathie Wood's ARK Invest sells shares of Tesla to buy UiPath. I don't think this headline is going to be treating her well in the future. Now, again, I know I'm going to get a million comments. Cathie Wood has to sell because she has to rebalance. No, she doesn't. I repeat, there is no SEC law. There's no FBI law. There's no executive order. There's nothing. Absolutely nothing stopping anybody who manages an ETF from managing it however they want to. Now, obviously, there are things that are illegal. There are things that can be malicious, but owning a large percentage of a company inside an ETF is not malicious. In fact, there is no rule about that. And most people misunderstand ARK Invest's rule on a 10% weighted ownership. So in most of ARK funds, Tesla is by far the number one holding, weighted at 10%, 11.5%, and 10.5%. And so people say, oh, she has to sell to stay under 10%. No. You are absolutely wrong. She can't add to her Tesla stake. If she has a 10% weighting of Tesla in one of her funds, she cannot add to it. She can let this run. She can let this run as high as it wants. She can let Tesla go to $3,000 per share, which she has predicted that it will do. She can do that. And it can be 14, 15, 18, 19% of the portfolio. That doesn't go against any of the ARK Invest bylaws. It doesn't go against anything that the SEC will want to see. It doesn't go against anything the federal government or anybody, the police, the FBI, ICE. It doesn't matter. Nobody's going to stop her. Okay? So understand, when she sells Tesla, she is selling it on her own accord. She is pushing the sell button on her own. There is no rules, nothing that is causing her to do that. But what is causing her to do that is people are pulling money out of her funds, and so she has to sell her biggest winners. And I'll pose this question to you. Does that sound like a really good investment advice? You have a great stock that has been performing great and you think is going to continue to do great, and you have to sell it because people are pulling money out of your fund. That sounds like a terrible idea. It's a terrible investment. I'd much, much, much rather own Tesla shares on my own and not be forced to sell them because people are pulling money out of your fund, because all the other investments that you've been buying, like Teladoc Health and Skills and all this other trash that she's bought, has been going down and going down rapidly. Whereas Tesla has been doing fantastic. In fact, we'll get to the technicals here in a second, and it looks great. Tesla's Elon Musk slams President Joe Biden's. I didn't like this under Trump. Like, people just called him Trump. And I don't like it under Biden. I don't like it with any president that we have. I think we should treat these men and potentially women with respect. It should be president, okay? So I understand this is a headline. They've got to squeeze it in, but that's just something I believe in. Look, I don't care who you vote for. I think you should treat these guys with a certain level of respect. Tesla's Elon Musk slams President Biden's EV policy for union influence, wants unregulated crypto. We'll let the unregulated crypto go. I thought this was interesting. So a proposed bill in the United States is going to give you a $4,500 tax incentive if you buy an electric vehicle assembled in the U.S. So you'd say, oh, that's Tesla. But wait, no, the facility has to have a union. So yeah, you better believe that got under Elon Musk's skin to a certain degree, because Tesla workers are ununionized for the most part. Tesla forecast to top deliveries. This is what I was talking about. I was expecting them today. I don't keep really close tabs on these. I'm sure they'll come out sometime over the weekend. We'll get Tesla's deliveries on their Model 3 and Model Y. I'm sure are phenomenal. Model S, Model X, we'll see if those have caught up as well. They think massive trajectory in September. Look, this time last year, I had 0 Teslas on order. Now I got 3. I just put the charger in, and I'm still 2 months away from delivery on my first one. We'll see what happens there. Moving on to the technical segment of the show. Start things off with Facebook. We talked about how this one's a broken trend. Okay, we were in a strong uptrend. I think, so here's how you can look at trends too. Okay, this was a big uptrend. It could be that we end up dropping this trend line down, and it's just not as steep. This is a real steep uptrend. Okay, this is why I also don't like, this is what I would call like a vertical trend line. Okay, one that goes up and down, or in this case, kind of diagonally upwards. And even the ones that go down, I don't pay attention to these ones too much, but I think I'm just showing this to you for illustration purposes, that it could be we flatten out the uptrend. Okay, maybe, maybe not. The other thing that I see here is we had our line marked in here at $350 per share. Well, Facebook's now at 342, so I actually expect 350 to be an area of resistance. But what I'm going to do now, and I don't do this without showing it to you guys here on the screen, I'm going to pull that line down here to $340 per share. That was a level of support actually back here in July, and it is acting as somewhat of a level of support, at least over the last week. So I'm going to be watching Facebook next week very closely. Does this 340 level hold? If this 340 level doesn't hold, we've got several levels down here that should act as some support. 330, so another $10 lower. You get below 330, and then I'm thinking we're coming all the way back down, maybe potentially all the way back to 300, that this was just a big old top blow up. We'll come back, retrace all the way back to 300. You retrace all the way back to 300. That is an absolute, I know it kind of goes without saying that, oh, it's a strong buying opportunity. It's honestly easy to say that when the stock's at 340. Okay. But imagine how bad that, okay, that's another way over 10. That's like 12% move down to 300. Okay. All the news will be negative. The technicals will be negative. Everybody will kind of be piling on. It takes a little bit of balls of titanium to kind of come in here and buy this stock, but that's where I will absolutely stone cold be buying shares of that one. Now, moving on to Apple, a little bit more interesting. It's kind of looking a little bit like Amazon, which we'll talk about here in a second. Apple broke below our 144. So this one was trading between 144 and 150. Once it broke up above 150, we talked, hey, this thing momentum. Loves to do that. Get up here. Well, then we broke 150, probably coming back down here to 140. Now we broke the 145 level. I think we're probably going to retest 137 on this one. In fact, we came very close this week. This week intraday, this thing was down 139 or so. Wouldn't surprise me if we pull back to that range. All the way back to 137. I think you got to step in and buy Apple as well. Again, you got to factor in macro stuff. I know there's a lot of macro stuff, government shutdowns, all this other stuff. A lot of noise out there. Okay, a lot of noise. You have to factor it in a little bit. Okay, got to factor in a little bit, but I like Apple and I like Facebook if we get those pullbacks. Now, Amazon is in a completely different scenario. Now, I do want to extend this trend line out. Okay, this one's been in place, acting as a level support here at $3,300 per share, but we are under it. I would expect Amazon to pull back to about $3,200 per share. That is likely a buying opportunity. Pull down lower than that, $3,100. Anything south of $3,100 all the way down to $2,900 is a buying opportunity. You got to be a little bit careful with Amazon unless you're one of these people with unlimited funds or unlimited margin. Even if you're on margin, you have to be very, very careful inching into a stock that's $3,280 per share. I will be buying fractional shares again for my kids sometime next week if this stock stays under $3,200 per share. That is a buying opportunity if I've ever seen one. Now, moving on to NVIDIA, again, not a stock that we've covered a ton of times here on the channel. We put this upward trend line, and what I, again, want to show you, just like I did with Facebook, well, we've broken down here, and it could be that we just dropped this down. I don't know. I'm going to take this off the screen because I think it's a little distracting. It looks to me this thing wants to roll over a little bit, okay? We broke this 210 level, came down here to about 207. 207 is an area of support, but it's just hanging out here, hanging by a thread. Okay, you break 207, you're coming to 200. You break below 200, you're coming to 190. You get even lower than that, 180. 180, my opinion, could be the first stop where I would think about adding to a position on NVIDIA. Again, I have shares of NVIDIA. I have shares of all of these stocks. I should probably say that at the beginning of the show. But with Netflix thrown out of the group, I actually own shares of all of these stocks, and they are a cornerstone of my retirement account in my IRA account. So, yeah, I like this at 180 at NVIDIA. Now, moving on to Google. Oh my gosh, I haven't said this in a year. Like literally, back in October of last year, almost a year ago, we're like 1 week short, it started an uptrend. Right around the first week, second week of October, right about where we're at. And this thing has been locked in an uptrend ever since then. And we have not hesitated on this uptrend. When I like these vertical trend line is when it forms a channel like this. That's when you know this thing is in a just absolutely stone cold locked in an uptrend. And the longer it goes, the stronger this trend becomes. And so when the trend breaks, that is a very, very big sign. And in fact, this line right here at $2,700 per share or so acted as a level of support. And we talked about how Google would have to wipe out that level for us to really think, okay, the trend is broken. Well, it came to there and it sat on that level. And now we've got an area of indecision. So we are monitoring Google very closely next week. You break below 2,700 and absolutely 100% this trend is broken. And in my opinion, you break 2,700, I think 2,500 is in play. You've got some gaps that will likely fill here. You don't got a lot of price action in between here. Now, if 27 were to hold, I think that is still means our uptrend will likely be retested again. We'll bounce here at 2,700 and we'll come back up here to 28, 2850, however long it takes to get there. We'll bump up against the bottom of this trend and we'll see if we can get back through it. You get back through it, that likely means that this was just a very, very temporary fake out and we'll wait to earnings again. You've got to factor in too, that we are very close to earnings on all of these stocks as well. And so major moves can happen that week and on the 28th, which is the vast majority of most of these stocks. Got to keep that in mind. The other thing we're looking for is probably a sideways consolidation with a lot of these stocks, okay? Because all of these stocks were on a major, massive run, okay? Pre-virus, these stocks were on a massive run. Think about, from 2019 to about February of 2020, these things were on a monster run. Then they took a major down leg. Every stock in this group took a major down leg in March of 2020 and then went on a monster, just an absolute monster run over the next coming weeks into the summer, into the early August, October season, and then they went sideways for basically a year, okay? And just more recently, earlier this year, after the elections and a lot of that kind of news cycle kind of flowed out of the markets, well, then stocks started standing on their own and they started ripping. Outside of Amazon, pretty much all these stocks had at least broken above their major resistance levels at the tops. That included Microsoft. And now what I'm expecting is I'm expecting these stocks to go sideways again, because that often happens with FAANG, often happens with mega cap companies, okay? They get just a massive amount of inflows. Investors rush in, buy the stock, get super excited about it. Sellers dry up. But then, we hit a wall of worry and these things sideways consolidate. That is a good area to buy these stocks because they have growing revenues, they have growing profits. They far outseed pretty much any other stock that you can look at in the stock market. Virtually any investment you can look out there, these stocks are certainly among the best investments you can possibly make. So as they go sideways, that is a good thing. Now, we're expecting that with Microsoft, and we are at the bottom. It looks like to me, if this is a new consolidation area right now at the current moment, the bottom is right where we're at, 288, 285, right in here. The stock is kind of bounced here and popped up to 306, came back down to 285. We could pop back up to 305 and come all the way back down. Again, we did that for a year with these stocks. We chopped around. So if these stocks start chopping around, we're trying to accumulate them at the bottom of the range. Okay. That's my advice on that. Now, the one stock that is a little bit different, in fact, I think is completely different, is Tesla. This thing is in an uptrend and it basically went sideways this week, which is no problem at all. This thing is in an uptrend. And not only that, we're above the key level, might be a little higher than this. Key level's probably 750 was the round number, but I think it's probably closer to 760, 765. We're still above that. We're at 775 virtually on this stock, okay? As long as we don't break below the previous lows, which right now I would say are probably about right here, which is for you guys listening, $730 per share. So I would not be concerned with Tesla really at all unless we break up below 730. And then we've got a Google situation. Then we've got a Facebook situation where we're going to monitor it very closely, because you break below this, then all of a sudden that usually brings in a rush of sellers, because from a technical perspective, it shows up on technical screens and even probably algorithms and those types of things. And that can drive the price of a stock down. But Tesla's looking good to me. If we can continue to churn higher, this one, I think without any major macro hiccups or any hiccups from their delivery reports numbers or anything like that, we're getting to 800 on this one, which is $25 higher on this one. You get to 800 on this one and you don't hesitate there, you're getting to 850. You get to 850, I think the momentum's firmly behind the stock, and you're getting to 900. If I had to bet, again, I'm going to Las Vegas in a few weeks. If I had to bet Tesla 900 or Tesla 500, I'm betting Tesla 900. I know that doesn't seem like that risky of a bet, but look, from a technical perspective, your probability is on that side. If this thing, though, breaks below 730, my bet would be 500, because you break below 730, then the wall of worry, the sellers could step in and this thing could come down to $550 per share pretty rapidly. Guys, girls, I hope you have a fantastic day. Again, links in the description below to the timestamps, although you probably already watched the video, but more importantly, my Instagram and my Twitter. And if you'd like me to follow you, I'd be happy to. Just send me a message on either of those platforms. I'd be happy to add to your follower count as well. Again, we're major month coming for the Investor Channel. I know the videos kind of slowed down a little bit. We're just taking a breather, okay? These are hard work. These do take a lot of effort, and I want to be fresh for you in the coming weeks. We've got bank earnings a week or two away, and then that follows by major tech, major earnings season I think that we've got coming up, and it could create some excellent, fantastic buying opportunities if you see some major stocks pull back during that time. Hopefully you guys have a great week or weekend. I'll see you guys soon. Good luck with your investments.